everyone, and welcome to Market Fatafat right here on ET Now. It's a flat market at hand, and you've got real estate as well as infrastructure, which seems to be bucking the trend, with the IT index putting quite a bit of pressure. Remember, the volatility index is trading low for the second straight day on the trot. But it's a hectic show. We've got lots lined up. First up, let's connect with the management of Guj Pipavav to talk about a strong set of earnings. We have Pedersen. He's the Managing Director at Guj Pipavav Port, now joining in. Good to have you with us on ET Now. Thanks much for joining in. Now, the container volumes, while they've been strong sequentially as well as on a year-on-year basis, tell us what was the fillip from the transshipment, and any shipping lines, have they been added by the company?
No, we have taken in a lot of transshipment volume also of empty transshipment. So the numbers are very healthy with a 49% growth compared to last year. Underlying, when we analyze the transshipment and the XM cargo, then the XM cargo is also still doing better than a market growth of 14% year on year. But we are very happy to look at the numbers for this quarter with a 25% increase in our income against only 7% in the expenses. So when we look at our 97.5 crore quarterly result at an EBITDA level, then it is actually equal to 18% increase. So the financial numbers are clearly important for us when we look at the mix of commodities we have had.
So what is the container volume growth that is expected, and what are your, because we have seen your efforts to grow faster than the industry and reverse the market share loss, are all of those efforts now bearing fruit?
I don't have, I can't tell you what numbers we will be doing for the next 6 months. But we will focus on growing with market. We will focus on doing the best for our customers, and hopefully continue to see this development. If we look at the full year, then I think by now we expect that we will have a record year, succeeding the 2014 record that we had. And then as always for the company, then we are very happy to pay out 1.70 rupees per share. So yesterday the board of directors approved interim dividend once again.
Now the dry bulk volumes are flat. Are you seeing a pickup here, and are liquid volumes going to continue to decline? Where do you see them stabilizing?
So liquid volume, we are looking at a number of initiatives to turn around the trend. We are obviously not happy with the trend over the last couple of quarters. Last year we had a record year of more than 1 million metric tons of liquid, whereof around 700,000 was LPG. We still see this market being a very healthy future for us. The trend line right now we need to turn around and get back on track in a healthy growth rate. On the bulk, yes, we do expect it to be in the same range. We are not having our high expectations in the bulk part of the business. Fertilizer is pretty steady, while for us coal has declined year on year. So that I would expect to be in the same range of the 500,000 to 600,000.
Now the realizations have been adjusted for the transshipment volumes, and that was nearly flat despite the rupee depreciation. What is the trajectory for your realizations in the second half?
So that is the mix of transshipment and XM cargo. That is correct. So the mix is taking our realization a bit down, but underlying there are no changes. We remain at the same realization for XM cargo.
And with the further margin improvement, can we see, what can we see in terms of your margin improvement, or are you happy to maintain the current levels of 60?
Yes, so we have said it before, we would like to see an EBITDA margin at around 60% at all times, but it is also an ambitious target, So I think it is absolutely realistic to expect us hovering around 55 to 60%. But we are having it under continuous scrutinization in terms of what we can do more of to improve our margins. And that goes for both the top line and at a cost level.
We wish you all the very best. Thanks so much for joining in and giving us a sense of what has been the quarter gone by as well as your growth going forward. That's Guj Pipavav for you in Focus in Trade today. But let's shift focus to an ET Now exclusive, which we will be doing in just a short while from now. But in the meantime, our team of research analysts are with us on the show. We also have with us Kunal Botra and Ashish Kayal to get us all the stocks buzzing away in trade. And Mubina can't start off the show without ignoring L&T because that has been a phenomenal set of numbers.
Well, we can't start off the show ignoring L&T, I suppose. But yes, it's been a strong set of numbers, a healthy order book as well. The revenue guidance and the order book guidance has been maintained. Brokerages as well are optimistic post the Q2 numbers. We have either a buy or an outperform stance being recommended by most brokerages. And this is something that's caused L&T to gain for the fourth consecutive session. In fact, at a level of 1,358, the stock is now trading at above all of its key daily moving averages. And interestingly, it's not only L&T, but also its peers like ABB, BEL, Cummins India, all of them have reported a good set of numbers in the capital goods industrial space. So this is something I suppose that's further propelling the stock to move higher in trade.
All right, it sure is. That stock is up and about in today's trading session. But let's move on then to UPL and see whether or not it's sustaining its trajectory. And in fact, the stock price reflects a pretty strong movement today as well. So Kunal, what's your take?
So we discussed this stock in yesterday's market Fatafat segment as well. I discussed that there's this double bottom pattern getting formed at around 650-55 levels, and the stock has climbed up substantially higher from these levels. Now today it's confirmed a break about 200 DMA, but I think more than that, the next set of resistance now for UPL is above 725. So the stock has a traction of another 25 rupees to be climbed from current levels, which is why I would suggest a buy at current levels and stop loss to be kept at 665, 670.
Now, all right, watch out for UPL, still likely to see more traction. Well, let's move on to VA Tech as well. That stock is active in trade today and in the news. A very smart rally is what you're seeing, largely on account of an order win in the Middle East. It's been awarded a major EPC order worth $500 million Saudi riyals from the power and water utility company for Jebel and Yanbu, Kingdom of Saudi Arabia. And just pull up that stock actually. The scope of the order includes expansion of the sewage water treatment plant. So this is clearly keeping the stock active in trade right now. But let's move on and now get you that ET Now exclusive. We understand from sources that the cabinet is mulling changes and amendments to the Companies Act. My colleague Parisha Tyagi joins in with all the exclusive details. Parisha, fill us in.
Yes, so the cabinet meeting for today just got over, and what we are picking up from sources is that the cabinet committee today took up the matter of an ordinance to amend the Companies Act, under which the government is planning to tighten rules around independent directors and also reducing the penalties on minor violations. This ordinance is based on a report filed by Corporate Affairs Ministry, and it was taken up by the cabinet today. So if this ordinance has been cleared, then it will be passed to the parliament and then to the president before it finally comes out as a law. But at this moment, we are picking up that it's most likely been passed, but we will, of course, have to wait for a final approval.
Thanks very much. A final approval is still awaited. Tweaks and changes have been made, including the fast tracking of M&As, as Parisha just flagged off, as well as simplifying the penalties. We'll have to wait and watch as to what exactly emerges from the same. But that's the ET Now exclusive. Perhaps potential changes and amendments to the Companies Act are being looked at. Well, let's move away from that. Get right back to market Fatafat. Loads of stocks to discuss. No festive cheer when it comes to Maruti's auto sales numbers at all. This time around, the total auto sales numbers as well missed the street estimates to come in lower than what we were expecting at close to 1.4 lakh units. You also have the top line growth, which has, the export growth, which has come in lower, 8,666 units versus about 10,446 units. So the stock is, despite that, is still holding out, but definitely been a miss. Moving on then to Siemens, let's understand what sort of a trend we're seeing today, Siddharth.
Awan, we don't talk about the stock quite often, and today we are seeing trend-changing move, and this is clearly a price volume breakout when it comes to Siemens. We are also seeing 18% rise in open interest, so both in terms of futures and options perspective as well as from technical perspective, we are seeing the stock performing quite well in today's trading session.
All right, watch out for Siemens. Don't flag that one often, but certainly merits a mention. Today, a change in trend and you're seeing a quite smart price volume breakout. Moving on then to HUL. And what do you reckon is the way forward, Ashish? Do you believe that the undertone of the stock remains positive, or do you believe that this sort of a move is here to stay?
For HUL, we can see some down move today, but the overall trend is positive, and I would look this down move as a buying opportunity. And we can expect it to go towards the level of 1674 on upside, and one can use a stop loss of 1539 as of now.
All right, keep an eye out. That's the verdict on HUL. Meantime, Mubina, let's talk a little bit about United Spirits, and it's certainly been a pretty strong quarter.
Yeah, and mind you, coming in after after lots of quarters of weak results. So yes, this time around, United Spirits has managed to beat estimates on all counts. Margin performance has been exceptionally strong after many quarters. The stock's doing very well today in trade as well. Underlying volume as well increased 8%. Prestige and above segment continued to grow in double digits, and that's causing the stock to once again extend its 3-day gaining streak to now day 4. The stock's slightly higher today in trade.
Okay, watch out. That's the take coming in on United Spirits. Meantime, it's Dixon Technologies as well that's in focus, and yes, on the back of earnings yet again. In fact, you have the details filtering in with respect to the September quarter numbers, where we have seen the bottom line growth decline about 15% to come in at 15 crore rupees. You have the top line growth as well, which has come in lower by 9.8% this time around. Remember, recently there's been that tie-up with Xiaomi as well, but looks like the weak mobile segment has dragged the revenues this time around, and that isn't really perturbing the stock today, holding out by 3%. Moving on then, let's also focus on Lupin. Remember, yesterday it came out with its earnings, and not too impressive in terms of what it stacked up to the ET Now poll. Macquarie is maintaining an outperform rating on the stock. They have a target price of 775. They've lowered the FY19 to 21 EPS by 19, 20 and 21 EPS by 8, 2 and 1% respectively. In fact, the FY19 US sales guidance is cut, and they said that this is pretty much on expected lines, and there's been a lackluster show despite the fact there's been the forex tailwind in terms of the rupee depreciation. The stock, as we speak, is losing more steam right now, 3.5% off. Moving on from pharma to tires then, and SEAT is a stock that's catching your eye, Siddharth.
Well, yes, fresh formation of long positions when it comes to SEAT. We have seen, a lot of resistance around that 1155 odd levels, and that resistance is getting breached, Awan. So resistance getting breached with formation of long position, it's a positive sign for the stock.
All right, keep an eye out on SEAT. On that note, let's just take a quick break right here on the show. Come right back as we discuss a whole host of other stocks. Great to have you back with us. This is Market Fatafat, staring at the index right now around the 10,300 mark, but let's squeeze in as many stocks as we can. BEL in focus. Take us through, Kunal, what exactly your reading is today.
So the last 2 weeks have been extremely positive for the stock price. It's been gradually moving up higher from levels of 75 to now 95 plus. Now today it's broken the 50 DMA quite convincingly, and looking at the chart patterns and the stability of uptrend, divergence on weekly charts, I believe BEL should rally currently from current levels as well. 105 to 110 could be a near-term target on the stock price.
All right, that's a stock to keep an eye out on. But meantime, Mubina, can't get your eyes off KEI Industries. Take us through the quarterly earnings.
Well, it's been a great set of numbers, and that's clearly evidenced in the way the stock price as well has moved. More importantly, KEI has also spoken about the guidance, which is something that has also enthused the street. But yeah, if you have to talk about the basic parameters, revenues have gone up 33%, margins have been more or less stable at about a little over 10%. And the profits have gone up by a neat 45%, and that's causing the stock to move up in double digits.
Oh yes, indeed, and it's a very well-deserved move that you're seeing on the stock right now. KEI Industries up and about in trade. Meantime, let's move on to another set of numbers, and that is Castrol that we should watch out for. In fact, we've seen that the net profit this time around has fallen about 15% to 150 crores. You have the total revenues which have come in at 945 crore rupees, and that's come in significantly higher to versus about 894 crore rupees. They've also spoken about how they've seen an input cost increase this time around, and the profits have been impacted by the lower other income as well as a one-off property sale during the quarter gone by. But the focus will be to pick up their volume growth across market segments. That's Castrol for you at 144. Moving right on then to Dabur, and after the numbers, let's check in as to what brokerages are saying. Down 3%, but Jefferies in fact has maintained a buy rating. They've got a target price of 460. They believe that the growth profile is significantly improving, and the management is talking about how ad spends will pick up in the third quarter. Moving right on then, it's oil marketing companies that are catching your eye. So that let's flag off some of the F&O trends today in IOC.
Well, IOC is showing some sort of consistency in bounce back, unlike BPCL and Hind Petro. Now here what we are seeing, Avan, that there is formation of long position in future segment. Also, if you look at what's happening, that cash volumes are pretty high. In fact, last 5-6 trading session, the activity in IOC was on a very muted volume. Right now, cash volumes plus futures volumes are pretty decent, and it seems that falling crude oil price is anyways benefiting these names.
All right, keep an eye out, 2% on IOC. Meantime, let's check in on Jubilant Foodworks as well. And Ashish, you have a buy rating?
Yes, Jubilant Food has shown a very strong rise from the lows of 1050 levels. It seems that an important pivot low is formed, and we should start seeing wave C on the upside. Go long on Jubilant, keeping a stop loss of 1077 for target of 1172.
All right, keep an eye out on those important levels. Stop loss at 1077. That stock sure is upbeat today in trade. Mubina, moving on, let's talk autos, and Escorts comes to mind with respect to the Q2 sales numbers. How have they been?
Well, Q2 sale numbers as well as October, Q2 numbers and October auto sales, both of these are keeping the stock active today in trade. But yeah, majorly at the early part of today's trading session, we did see Escorts reacting to its Q2 sales. Pretty impressive. Sales up 15%, net profit up 32%. So that's something that's keeping the stock active in trade. But yeah, October auto sale numbers as well were pretty impressive, coming in at 13,140 units. The ET now poll was putting the number at approximately 11,000 units. So it's a neat beat, and it's higher by 29% from October 2017 sale numbers.
All right, keep an eye out on this one, certainly in focus in trade today. Moving right on, it's a banking name that is in focus as well, as IndusInd Bank is in the news today. In fact, they are looking at disclosing the ILNFS exposure details, and they say that the company currently has close to a 2,000 crore rupee exposure to the holding company. Watch out for IndusInd Bank. Meantime, HEG is sure having a terrific run in trade today, and that's largely on the back of its quarterly earnings that the company has delivered. The standalone profit has jumped a good 68% this time around. You have the revenues which have come in at 1,794 crore rupees on a standalone basis. It's high realizations that have clearly driven their growth. The EBITDA as well has come in higher this time around, and the stock is rejoicing. Let's move right on to number 20 then, and Shriram Transport. Siddharth, why is that in focus?
Well, most of the NBFCs are correcting since beginning or mid of August, Avan, and Shriram Transport Finance was no different. Now, why I have opted for this stock? Because this stock has retraced more than 50% of that fall which took place, which is a positive sign. So any stock which moves above that 50% retracement suggests that there is some strength which is there in underlying. At the same time, long positions getting formed, and it's not just short covering rally in Shriram Transport Finance, unlike some of the other NBFCs which are just going up mainly because of short covering. So display of strength by Shriram Transport Finance.
Oh yeah, sure is seeing that. Nice 3% as we speak. Moving on then to M&M Finance, and that's a stock, Kunal, that you're flagging off. You believe that we could see some more traction. Where is your target here?
So yes, I think the chart points are a bit positive for M&M Finance, and compared to most of these other stocks which when in the last 1 week or when these stocks managed to break the previous swing lows, M&M Finance managed to hold on to its previous swing low, and now it's one of the first names which is trying to cross its resistances. These are positive signs which one can read on the stock price. And now it's on the verge of breaking a 50 DMA as well. Pairing M&M Finance should rally from current levels as well. 440 could be an approximate target in the very near term.
All right, keep an eye out on M&M Finance at 418. Well, let's move on to another newsmaker. Although it's flat in trade today, why is Prestige in focus, Mubina?
Well, Prestige Estates does have an important development when it comes to the stake sale, the office stake sale to GIC. Remember the last time we spoke, he was a bit elusive with respect to the same, but now reports are suggesting that the 2,000 crore rupee office stake sale to GIC has been shelved. So this is something that has perhaps spooked investors a tad bit. Stock, however, is not doing much today in trade, but is definitely in a downward direction.
All right, there you have it. That's Prestige Estates for you in the news. But that's all the time we have right here on the show. Thanks much for watching. With that, it's a wrap.
You are on top of the world with Times Network. And you're watching ET Now.